Welcome back to the Cap Money Trading. Today we are discussing about very important thing, how to catch the big moves and trading or investing. Even some time back, why this is I missed the trade, how to get this kind of big moves. So today I'm revealing everything. Let's begin. I'm not a SEBI registered for educational purpose. Thank you. Why we need to use multi-time frame analysis for any indicators, not only the moving averages, for any indicators, and how to set up the multi-time frame analysis for moving averages. Okay, what are the parameters are required? That is very important actually. So how to identify the trend? So always people are saying how trend is a friend. So today we are identifying how to trend we need to identify. Entry, SL and the target. So I will show you some of the scanners and finally the risk management. Please watch the till the video end because the risk management is the key success. You should be know about how to calculate the risk management. So now let's get started. The moving averages is multi-time frame analysis. Why we need to use multi-time frame analysis? Because if you see a single time frame, okay, you cannot able to identify the big pictures. So even for investors, big investors, foreign institutions, okay, those are all people, they are using the big pictures like weekly, monthly, quarterly, yearly also sometimes. Okay, sometimes we are scanning the stocks on year basis also. So showing the big time frame analysis for investing different time frames we have to use. Trend is a friend. So if you identify the proper trend is up, you go for buy. If trend is down, you exit. If you are doing a trading, why we need to use big time frames? Again, suppress the noise basically. So if you are showing the chart is clumsy, simply switch it to the high time frames. Okay, you have to go higher time frames. Suppose you are analyzing a chart on daily time frame, so the chart is clumsy, you are not able to identify proper trend, then switch back to weekly. So daily charts, okay, we are trading, we take the entry and SLs. On the weekly time frames we identify the trends basically for the long term investing. So that is the reason always use the high time frames in the trading basically. It's an important not only you, not only mine, okay, all the foreign institutions, bankers, all portfolio managers, okay, they are using the multi-time frame analysis. Let me show you how to plot the multi-time frame analysis. The trade setup multi-time frame analysis. Weekly is for the trend identification, daily for the entries. So the setup we are using is 20 period moving average is the high, 30 period moving average is the low basically. So 20 period is high, 30 period is low, then we will get one buffer zone. Zone is called as a support and resistance zone. So using the zones, okay, we are trading. I'll always, okay, there are two kinds of traders. The reversal trades, okay, once the price is come into your zone, then take a entry. Some people, okay, like me, okay, people are using the breakout traders. So breakout traders means, okay, once you come into my support zone, then I will take the confirmation, then I will trade it basically. So if it's a first break, then some other investors come. Second break, some other institutions people come and it will invest in that stock. So I always believe once you break the stock, it will go up. But we will always identify the good support and resistance zones also. How does the stock market it work? The rules are simple. So any strategy we need a rule basically. If you are not following the rules, you will not be in the success basically. If price moving above the MA lines like 20 and 30 moving lines, okay, above the price is above moving, okay, then it's a bullish. If it's in a below, it is in a bearish. If it's in the middle in the support zones, it means a sideways trend basically. So first what we will do, we will analyze the chart on weekly, then we'll identify the trend. If trend is up, then okay, we'll go jump into the daily time frame, next time frame, then we'll take the entries basically. That means we take the before that we need to calculate the risk management, and the next is the trade execution on the daily time frame. The investing.com, okay, you can see here, this is the investing.com. It is a free tool. Okay, once you logged into here, okay, it will show like this. Then okay, you click on charts, live charts, that is the one option. Once you open here, you click on maximize. Here you will get all the stocks. Suppose you are seeing on the Nifty chart, okay, Nifty 50 chart, what we are seeing is the daily time frame. Here you can click on the daily. Okay, you can see here daily time frame. I'm showing here. So this is the daily time frame we are using. So this is the Nifty. When you click it here, okay, the Nifty chart, it will open. So what you have to do is we need to plot the indicators. Okay, you need to use this window. So to plot the indicators, you click on here. These are all the indicators. You type it as moving averages. So moving average. So there is a moving average channel also, but I will not use this. I will use moving average or exponential. I will go to the simple moving average. First, when I click the chart, it will come here, the indicator in the chart. The second unit, I need two moving average, one for 20, one for 30. So here I need to do some settings basically. So what you have to do is you can click on the settings. Okay, here once you click on the settings, it will open here. You need to change the length to 20. It is very easy. This is a big difficulty, one time activity this is. Then this I will make it as a high, 20 and high. Style I am going back is this is the green color. So I'm expanding this width. Okay, and expand this, click OK. I'm going to the second indicator. This is the 30 and this is the low. Okay, 20 is high, 30 is for low, and the style is this is for red. Then this will make it as thickness. So now you got the zones basically here, the zones. What you have to do is this is the candlestick pattern. The next step you need to change the chart type. Okay, I will always use the Heikineki chart. Okay, so this Heikineki chart. Now we plot the indicators 20 and 30, and okay, we change it to Heikineki chart. So now we need to. This is the daily time frames. So we need two time frames. One for daily, one for weekly. Weekly and daily charts we need to plot. So how to do that? Okay, let me show it to you. So I am going back to my chart. Here there is an option called, okay, you can see here there is option, the split windows basically. So this is for trading view, you need to pay if you want to split the screen in two ways. Okay, for one for daily, one for in trading view. Okay, this you can see here my trading view. So these are all split screens. So this basically it's a paid version. This is the weekly, this is daily. This you need to pay for this basically, but investing is free. Auto, you click it here. You need to select the two windows. Okay, you can select the 3 windows, 4 windows, 5 windows also. Click here for daily. This I am changing it to again back to clicking here weekly. So this screen is weekly. This screen is daily. Already it is in daily. If not, you can click here. You can click day. So now you can say that this is the weekly time frame. This is the daily time frame. So now Nifty, I want to identify a trend. So to identify a trend in weekly time frame, we need to go into the weekly time frames. That means this window, this screen. So this is the weekly, this is the daily. So this way we can able to identify the trends. Step 1 is how to identify a trend. Once the trend is identified, like if it's uptrend or downtrend, so then we will go for trade execution. Means we will buy the stock or sell the stocks. Okay. Before that, we will see the positioning also. So let me go back. Candles are price is crossed, then it's becoming a weekly uptrend. So means this stock is uptrend. Nifty currently it's going in uptrend. Very easy. If this green lines, okay, if this line is going up, if this line is crossed, then it is in uptrend. So now Nifty is in uptrend. So where I have identified in the weekly basically. So that way you can able to identify the trend in weekly. So once the lines are crossed, means that our buffer zone or support line or support. Sometimes if price is crossed, then it will become a support line. If price is below, that is a resistance zone basically. So here the line is our zone is crossed. The price crossed means the candles are crossed, so it is an uptrend. Now we're going back to the daily time frames. Once this is crossed here, then now this is an uptrend. So where I will enter, I will not enter immediately. I will wait for the pullback. So this is my zone. Once the coming on zone, then if it is across the previous line, break up. Okay, this is called as an pattern. I will always call as an pattern. If it is an across, then I will enter. This is my stop loss. So this way we can easily identify the trend, and we can easily enter the stock basically. You can put the limit order 1 or 2 days before also. Then once it's executed, try to put the stop loss coming back here. So this now what is happening here is the Nifty, when you analyze the chart, Nifty is still going up. Okay, it went up. Maybe it will come back. Okay, so sometime here actually, then it will go up. That means here also, okay, it will go up. Okay, maybe it will come, it will down, I don't know for now. Okay, it will go up or go down, I don't know right now. So if it's in a going up, okay, then I will enter a trade here. If it's in a breakdown, okay, then I will enter trade here for the short. This is for long, this is for the short basically. So let me analyze the another chart, the Infosys. So you can see the Infosys chart. It is changed Infosys here, but it's not changed. Okay, still it is Nifty. There is a one setting you have to do. This is a very, very important. You click here, link the symbol to the all charts. Okay, this what okay I'm talking about. Link the symbol to all charts. The first option you need to check this. Okay, then only it will come. Okay, so you click this. Now okay, it's changed to Nifty. You click back. Okay, here you click the Infosys. Now okay, it's both the charts. You can see the Infosys, both the charts are okay. So now you can say that this is the trend is down. Nifty's trend is down. Okay, now because these lines are not crossed. If it's the lines are here crossed, the trend is up. Okay, I'm going back. Okay, here. So I'm going back. Okay, the trend is okay crossed here. Okay, because this green line, the zone is moved. Okay, around this place you can enter or wait for okay pullback and you can enter. This is the I traded okay this from this here level actually. This zone okay I traded this zone. Okay, I entered here and stop loss put it here. Then it went up okay around this place. I exited. It's not a good profit, but still I can say it is a decent profit actually. So this like this okay you need to analyze the stocks okay all the time. The higher time frames is weekly time frame and the lower time frames is monthly time frames. Sometimes people are using the monthly also, monthly and weekly. So, but my preferred timing frames, okay, for the investing, I will always use the weekly is the high time frame and daily is the execution time frame basically. Daily and weekly. Week is the trend and day is execution. So this the way okay we need to analyze the trend. If trend is up, okay, then we will enter. Okay, so let me show you one more stock. Okay, this is the ICICI Bank. Okay, here you can see click hit ICICI Bank. So now you can see the ICICI Bank completely trend up. It took the support here actually. You can see this is a very good supporting zones basically. How it will act okay as a supporting zones. What I'm talking about is this place. So this is the place okay you need to be. This is the place okay supporting zones. Okay, it will always take the support. So let me show you one more also. Okay, like okay before this is the supporting zones. I use the rectangle box. Okay, this is the my zone. This is my zone. So once the price is come into my zone, you can see here. Once you come into the price my zone. So it is in the buy zone. Yes, okay, demand supply zone. Okay, demand and supply zones basically. Then I will immediately not enter the stocks. Most of the people what they will do, they will enter the stock okay immediately for the reversal. But most I faced okay reversal trading okay always the always risk reward is less, but the most of the times okay it's hitting the stop losses. So I need a confirmation. So what I will do, I will wait for this and I will wait okay to my again daily time frame zones. So these time frame zones okay once to come to the price, then I will enter. I will put my stop loss around here. Then the stock it will come and go and come and go like that basically. So this way you can enter the stock okay and follow the stock actually. So once you get the sell signal around here okay, maybe around here you can exit it okay, no problem, exit here. But still okay this is my supporting zones. That's the reason this the ICICI Bank okay. Same setup okay, I will show you ICICI Bank okay in here also. So here you can see these lines okay, these are all lines okay. Took the support here actually, then it went okay. Once the price is coming back here and it went like a. So this way you can trade it. The same indicators okay you can use. My stop loss is currently like here actually. My current okay bottom line is the trailing. Okay, once here it's a trailing stop loss, trailing stop loss, trailing stop loss. Okay, like this it will go. So this way, okay, you can see the Reliance stock also same thing. It is crossed here. I got it here because I entered here. I hit my stop loss. Yes, okay. There, I am not saying there is no percent win rate, but it is always okay. You use this indicator. So this way, okay, you can easily identify the trend and execution, the time frames basically. So to do the scanning, basically trading view or chart link, I am using the chart links for the setup the scanning. You go back and in weekly 30-day moving averages, the price is crossed, then you will get the trend is up. Then in daily time frame, the price is closed below the moving averages. Same stock I'm talking about. Okay, we will get the pullback stocks. So this way you can, two ways you can able to scan it. One for the trend is up stocks, one for the trend is low. Okay, let me show how to create a chart link scanner. Okay, this is the chartlink.com. So here you can go to the scans and create a new scan. This is completely absolutely free, no need to pay anything. What I'm doing here is, okay, like I'm taking the weekly time frame, closer price. Okay, you can use the HA close also. HA close, okay, you can click once you click here, HA close or closer price greater than weekly EMA high. Okay, you can use the high of the Kinashi. Weekly 20 moving averages high, or okay, HA close greater than or equal to EMA low. High low, 20 is high, 30 is the low, and run the scan. These are all the scans. Okay, you are getting a, here you can use the Nifty 50 or okay Nifty 500. Okay, then okay you can use your watch list or okay whatever you want to. There is a pass all condition. Yes, you have to use the pass all condition. So futures, if you want to trade futures, select the futures and save and scan basically. So now the scan is saved and it's opened. Okay, these are all the stocks. Okay, the weekly time frame trend is up. These are all the trend. What is this Kalanjali? Okay, let me take this word. Okay, then I'm going back to the here. Let me search it. Okay, so here the trend is, I can say trend is up. Obviously, no need to look for trend basically in the weekly time frame. You can see the trend is crossed. I got some pull also from taking the support zone and it is going up. We missed this trade basically, what I can say. You enter the stock here, apply the stop loss, the stock it will come and go. So this way, even if it's some little pullback okay coming, okay, then you can try to enter into the zone. This is supporting and resistance zones, it will go like this. So this way you scan the stocks. Max Health Insurance, so there is one more scan, Max Health Insurance. Once you click here, automatically it will change this. So this is a surprising. Okay, we missed this trade completely. In 2020 the Max Healthcare is came. The really I am also missed this. So after that, okay, it is completely uptrend. It started at the 200, 135 rupees something, 110, okay, 88, not 88, maybe 100 rupees, okay. It came 100 from the starting and now it is 1200 stock. 1200, it is completely going. It's completely going up. So now still it is a good stock. We can enter the stock. Yes, we can enter able to. So now you should enter it here actually. So you need to enter here. Enter the stock and wait for the stop loss is here. Yes, sir. So why I am putting the SL is in the weekly time frame, not on the daily time frame. Daily time frame is entry and the weekly time frame is enter. One time frame higher you need to put the stop loss single or below this red candle. You can see this red candle. This is the stop loss basically. That way, see, you can completely uptrend. It is in, I don't know where it will go or it will come the correction. I'm not sure. But I need to follow. How to follow? Suppose if you enter a stock here, then first stop loss is here. Then okay, again the trailing stop loss. You use the trailing stop loss, then trailing. Okay, wait for okay pull. Once the candle is up, once the green candle is happened, okay, you move your trailing stop. Once this is up, you move. Once this is up, you move this like this. Okay, you need to trail your stop losses. Okay, in stop losses, that is a very good technique. Trailing stop losses is the only thing you can catch the big moves, very big moves actually. The Biocon, these are all good stocks. Okay, Biocon Limited, you can see here itself the trend is already going up. You can see here, so this is already went up and it's coming pullback. Geo Finance, okay, Geo Finance is already given uptrend. If you know the proper risk management, okay, you will be 100% success in the stock market. If you don't know how to do the risk management, okay, definitely in the stock market 95% of the people are failing, only 5% of the people is success, is because they know how to manage their risk. You entered a stock, you don't know it will go up or it will go down. If it's go down, it will hit the stop loss. So you come out, exit, okay, you take the loss and exit, come out. But if you are keep on trading, okay, or averaging positions, okay, you will end up. Don't use the any averaging concept in trading or investing. So if it's in a loss, you take the loss, exit, find out the good trade, the weekly trends, daily trends, fundamental analysis, and try to enter. It's not a rocket science. It's very easy basically, but you need to be patient. You need to analyze before everything. So now the risk management, how to calculate the risk management. This is the formula. How much quantity you want to buy. If this stock is fundamentally good and my friend is referred, so everything is good, I will put entire my 1 lakh capital, then you will gone. You will gone. So if stock goes down, okay, your 1 lakh capital will wipe off. So you calculated the position, how much loss you want to be in this particular trade. This is very important. That's the reason every video I'm stretching this point actually. So how to calculate it? You need to calculate the entry price and the stop loss first. So this is important. Your risk per trade you need to decide. Suppose you have a 1 lakh rupees or 2 lakhs rupees. I want to do risk per trade is 5,000 rupees. If capital is goes up, okay, your risk per trade. Suppose entry and stop loss, I will take the example. Suppose entry is okay, you are entering 100, then SL is then gap is, okay, you need to calculate the gap. Gap is equal to 100 minus 80, that is equal to 20. So 20, you want to take a risk only the 20 rupees. The quantity to shares by is equal to, my risk is, okay, like I will always find out, okay, 2000 rupees only, divided by 20. Because I'm giving just my risk is 2000 rupees. I don't want risk more than 2000 rupees. This you can buy is 100 quantity. So this way, okay, you can able to calculate the risk positions. So you go and buy the 100 quantity and wait for the, if hits the stock is 80 rupees, okay, you will be lost only 2000 rupees basically. So if stock is going up, okay, then you trail your stop loss. Very simple. You need to be calculated the risk. Yeah, this one, okay, SBI, this is the live example, okay, I want to do around the zone. Now what I will do, it is coming the zone. Now in daily time frame, it's coming here. So once it's come here, goes up, then okay, you wait for this support zones. Already it's came, okay, maybe tomorrow or day after tomorrow it will go up. Suppose if you want to enter at 30 and your stop loss, you have to calculate it here, this 830, okay, this is the point. So this how much is 770. So how much is 830? 830 is my entry. This is the entry, and this is 770 is my SL. The gap, what is the gap? Gap is 830 minus 770 equal to 60 rupees. So gap is 60 rupees. So now you calculated your risk quantity. QTY is equal to, suppose I want 5000 rupees risk divided by 60. So now, okay, you will get, okay, how much? 5000 divided by 60 equal to 83 stocks. So you go and buy 83 stocks. So QTY, this is not rupees, this is a quantity, 83 stocks. Tomorrow I will go and enter into my. So this is the way you have to calculate it. Even if it's in the price is goes down against me, this something, it will come and pull back, okay, it will hit my stop loss, I will lose only 5000 rupees in my capital. That's fine. I analyzed because the trend is up. Generally, if the trend is up, it it will took the support nearby and come back and it will go. The risk reward is very, very important. Always you have to calculate the risk reward properly. So the key takeaways here is you know how to identify the trend in weekly time frames, like 20 and 30 moving averages, plot the moving averages. So the trend identification not only for moving averages, even other indicators also same, like you use RSI. So now how to use the timelines. Okay, here we are using the timelines used daily and weekly time frames. Higher time frame is weekly and lower time frame is daily. Then we use the strategy rules. So how to enter if the price is crossed, then is an uptrend. How to enter a stock once the pullback on the daily time frames. End pattern, always look for the end pattern. So you scan screeners also in the link below. I will give this scanner in the link. Maybe if you don't know how to create it, you directly use and tweet a little bit if you want, like if you want 500 stocks, if you want futures or Nifty 50, then you can use your own way. And finally, the important concept we talked about, the risk management. It is a very, very important about the risk management. Now, thank you so much for the completely strategy setup and how to catch the big moves. Even Max Health Insurance we identified, okay, it's from the IPO onwards, still it is going up. Still it is a very good profit, people who are invested in this IPO. So like this, okay, you scan it, identify the trend. The risk management is key. Again, I'm saying, okay, thank you so much for listening patiently. Please subscribe and share the video if you like it. Thank you so much.